Come join the live, man. We on Twitch right now. Log on to Twitch, twitch.tv/courtside mill. All right. Click the link in bio. Join in. Appreciate y'all. Peace. Yeah, click the link in bio and join the live stream. We on Twitch right now, twitch.tv/courtside mill. Twitch.tv/courtside mill. Join the live stream. We on Twitch right now. Click the link in bio. Join in. We about to get this game. Show y'all how we did this 40K in 5 days. Join the stream on Twitch, twitch.tv/courtside mill. Click the link in bio. See y'all there. Peace. What's good? Yes, sir. Yo, last week day of the year. What's good? So what you know about Gap? Come on, bro. All I was in old school. You feel me? Old school. I can't. It's a time and a place for the other. You know what I mean? Lately, I've been on the old school classic. You know what I'm saying? Facts. So I'm about to get into some stuff real quick. You dig what I'm saying? I'm about to get into this. Today was crazy in the market on how it ended. All right, right now it's 311. The market just closed. It closed strong. It closed pretty strong. You know what I mean? Huge push from 2 o'clock all the way to closing. All right, we're gonna get into that too. Appreciate y'all for joining. Make sure you follow. All right, make sure you hit the follow button, man. We gotta get these followers up. You feel what I'm saying? So main thing we want to talk about today, a huge topic that I think everybody on here can take advantage of, right? So this right here is an article. We've been going through a lot of different articles. We're gonna be reading a lot. I'm gonna break some stuff down to you while we on here, and I'm gonna show you how you could use the information and apply it to a strategy that could get you paid. You feel what I'm saying? So the first thing we're gonna look at is this article right here, right? These 5 trading days, these 5 trading days accounted for nearly all of the S&P 500 losses in 2022. So basically, even though the market's been dropping like crazy this whole year, what it's basically saying is it was only 5 days out of the year where the market really took like 90% of the losses in the entire year. And it goes into which day it actually, right? For the people who are in my trading group, you will know we have strategies that we use, and we trade around different news topics. So there are different news topics that you can tap into on a monthly basis that usually give you a big reaction when it comes to the fluctuation of price. You feel what I'm saying? So the fluctuation of price will happen when that news release comes out. So the first event that we can talk about is September 13th, which is the one that is the most recent. All right, September 13th. All right, so right here is the worst day for stocks since 2020. All right, this was the release of the August U.S. Consumer Price Index report, and that sent traders into a panic when the data showed the annual headline and core inflation was running hotter than expected. All right, so everything about this year is is inflation, inflation, inflation. Everybody knows that inflation is a huge deal. All right, basically the cost of goods and services is getting to a point to where a lot of people can't afford it, and it's an issue because it doesn't necessarily mean that the money that you're making at your job is going to increase. So you might be getting paid the same amount of money that you always getting paid, but now your $20 don't buy you as many goods or services. Things get more expensive. So you either gonna have to make more money or you're gonna have to hope and pray that inflation gets under control and prices start to come back down. So every um every month they give you an update on what that CPI number is, the Consumer Price Index report, right? And in September, it came out to be a negative 4.3%, right? So the reaction in the stock market because of that news was terrible. And as a result, you know what I mean, the stock market dropped dramatically. Oh, I'm sorry, the stock market dropped 4.3%. The CPI report actually came out at 8.3%. So the CPI report came out at 8.3%. And as a result, the stock market dropped 4.3%. Huge drop in the stock market. So let's look at what it actually looked like. So let's go to the S&P 500, and we're gonna go back to September 13th, right? So it's very important to know that it is possible for you to actually use the chart and watch the price fluctuate by reading candles, all right, the candlesticks. All right, that's what you see on the chart. So we understand how to read this and we know how to respond to this. And if you're interested in learning, make sure you visit my website. All right, the information is on the actual channel. All right, but check this out. This is September 13th right here. All right, this is September 13th right here. This date right here. Boom. You see how the price went to a peak. All right, and then after that, it dropped. All right, so from the top all the way down to, let's go to the 14th or to the end of the day. Boom. That's in the futures market. It was actually a 5.59% drop in the futures market from top to bottom, right? So how does that equate to actual dollars? All right, we talking about actual dollars. You feel me? We pull the calculator out so y'all can see that. 934 is the ticks. All right, so it's 934 ticks. It was dropped from top to bottom. All right, each tick in the S&P 500 is worth $12.50. So if you buy one contract of the S&P 500 futures, you'll be able to get a huge advantage of the price fluctuation from up to down, depending on how you trade it. If you want to short it, you want to make money as the price is going down. If you want to go long, that means you're making money when the price is going up. So in this situation right here, we're talking about a drop of 934 ticks from top to bottom. Multiply that by $12.50, right? How much money is that? That's $11,000. That's $11,675 in one day. That's the reaction from the CPI report. You feel what I'm saying? So that's just giving you an example of how powerful understanding what news to pay attention to, because you got news playing all day. You know, some people watch the news from sun up to sundown, and most of the stuff that people watch on the news is not beneficial to them financially. They be looking at the news and looking at negative stuff all day. But if you got money issues or financial issues or things that are keeping you away from getting to the money that you want or the money that you feel like you deserve, you trying to figure out what to do and where the opportunities are. If you look at the right news, there's your opportunity right there. So you could consume yourself with negative news and hear about all the different, crimes that's taking place and scare yourself with that, or fill yourself up with fear based on that. Or you could pay attention to the news that's actually going to put money in your pocket. So what we do is we pay attention to the news that actually puts money in our pocket, right? So this September 13th report that came out, put us in position to make $11,675 in one day. It's not even that much risk because we already knew what was going to happen. You know, most of the people that was in my that's in my program, we traded this live. This was a live trading opportunity right here, and we already knew what direction it was going to go. For the most part, we understand that the inflation rate is not dropping. So from month to month, we expect for it to be an increase unless something dramatic happens to where they could bring it back down. So we already knew that the expectation was going to be an increase in the CPI number, which means that that's not a good thing for the actual stock market. So why would the stock market drop when the CPI number goes up? The reason is because that means that the value of the dollar is decreasing because each dollar is going to give you less and less goods and services, right? The value of your assets are not always is going to be as strong either when you're dealing with a high CPI number. So when it comes to the stock market for people who are investing, it's not a good indication on the strength of the actual economy. So if the economy looks weak and it looks like the flow of money is slowing down and people aren't buying and people aren't selling and people aren't as things aren't as lucrative as they once were, then that basically tells me that I need to probably cut my investments a little short because I'm going to need to get access to that money. So I'm going to sell some of my assets so I can get some more cash to pay for what I need to pay for. That could be a reason why people will sell off a lot of their equity. But that's neither here nor there. The fact of the matter is the price drops. So either you're going to be a part of it on a positive way or a part of it in a negative way. Some people just don't do nothing about it. A lot of people who are invested in the stock market just sat back and watched their portfolio decline in value and ain't do nothing about it. We benefit off of this. If you don't notice, the stock market goes up using the stairs and it goes down using the elevator. So it falls faster than it goes up. So you might have had a great time in 2021 as the stock market was on an incline. You was making money, but the truth be told, you actually make money slower when it goes up. If you are able to short the market and make money as the price goes down, you'll be making money faster if you understand how to short the market. Because fear is a bigger and stronger reaction than greed, to be honest with you, right? So that was an $11,000 opportunity right there in one day. That's the first opportunity. Let's look at the next one. Let's look at the next one. All right. So the next one we're talking about right here is the May 18th. And May 18th, the market dropped 4%. All right. What happened? Retail giant Target missed the first quarter of earnings expectations by a wide margin. All right, elevating worries about the U.S. government's ability to cope with inflation into a full-blown panic one day after Walmart highlighted similar concerns. What I just said was, if the CPI number is high, basically what that means is the value of your dollars less and less. You can't buy as much stuff because it's expensive, right? So when you're dealing with companies like Walmart and Target, where a lot of people go to buy their goods, they're going to have less earnings because people are going shopping less. They're buying less items. So as a corporation, that's not good for your bottom line because now you put yourself in a situation of getting profit once, right? And if your earnings aren't as once were, what is going to keep investors enthusiastic about investing in your company? So this is the reason why people sell their equity, because if they're investing in a company that isn't as profitable as it once was, then I'm either going to take my money out of that company and put it somewhere else, or I'm going to take my money out of that company and just sit on the sidelines and wait until things get better. And on days like this is when people actually make that decision, right? So on May 18th, a lot of people decided to sell their Target and Walmart stocks. As a result, the entire market declined by 4%. So let's check out May 18th real quick. So if we go to May 18th on the chart, we zoom out, right? We go to May 18th on the chart. All right, boom, May, let's see, boom, May, we got May, boom, May 18th right there. All right, so May 18th is right here. All right, May 18th is right here. Cool. All right, so we got May 18th right here. We got some people in here. I got a couple of guests. Appreciate the guests. I know you guys might be waiting on the sidelines to join in with me. Give me a minute. I'm gonna break this down. Show these people how much money they could have been making. I'm only breaking this down for you because it's gonna happen again next year. So in 2023, you need to have a game plan that will allow you to make money, a large amount of money in a short amount of time, if possible. If you can use these type of economic news releases, this can actually give you a head start, or at least organizing your situation to where you know it's coming, and now you know how to respond. So on the 18th, you got the market from a peak up here, and it dropped all the way down here, right? Let's go all the way, yeah, so about right here, boom. All right, so this one was a 747 tick drop on the S&P futures. So we got 11,675, right? 11,675, 747, that's 747 ticks times $12.50, right? That's a $9,000 day. Shorten the stock market. $9,000. So we're gonna round it. We're gonna round it down just to be modest. We're gonna go from 11,000 and we're gonna go for 9,000. Boom. That's 20 bands. You feel what I'm saying? That's $20,000 in 2 days. We still got 3 days left. I ain't even talk about the other 3 days yet. This is just the first 2 days I'm going through on this from this article. So when you go through the news and you see these economic news articles and whatnot, I like to go to Market Watch. I like to go to Yahoo Finance. I like to go to CNBC, investing.com. You feel what I'm saying? Forbes sometimes has good news articles that you could check out. All right. You got to keep track of the news, because if you look at the right news, it could open your eyes and put you in position to make a large amount of money if you know how to execute. So I teach you a skill that will allow you to execute, right? If you know how to properly execute, you can plan these opportunities. Now, some people ask, yo, you be day trading? I don't know if I have time to day trade every day. Listen what I'm saying. I just broke down 2 days where you could have made 20 bands. That's half of what the average person makes on a yearly basis. That's half of the minimum wage. You're putting 2 days worth of work and getting half of what the average person makes in a whole year. So it ain't even about whether you day trading or not. If you understand what you're going to look for, you can plan ahead. And sometimes one trade in 1 year could be the only trade that you have to take. You don't necessarily have to day trade. You feel what I'm saying? If you don't want to be a day trader, you don't have to be a day trader. You could plan strategically ahead to where 1 or 2 trades a year can make you enough profit to where you don't have to do nothing else the whole year. This is facts. I just broke down 2 trades in 2 days that could make you $20,000. That's half of what the average citizen is making for a whole year in salary. 2 days, right? And these are all reports that we knew was coming. This ain't no surprise. We knew that Walmart and Target were going to have an earnings call. We have a calendar that comes out every single week to let you know when these companies are going to have earnings calls. There's websites you could go to that will give you a heads up months in advance so you could plan it. All right. Another resource you could go for is eWhispers. If you go to the Twitter account for eWhispers, they actually give you a calendar each week. You could plan this stuff out. Outside of that, the CPI report that come out every month, the first 2 weeks of the month. All right, the CPI report usually comes out the second week of every month. Right now, CPI, Consumer Price Index, inflation is the biggest topic of the whole entire year right now. So every time that report comes out, you should expect a pretty big move in the market. And if it's a negative report, you should expect the market to drop dramatically in one day. All right. So that was the second argument that just broke down. Let's look at the third one. All right. Let's look at the third one. So the third was on June 13th. Stock dropped 3.9% in one day. Today's punishing sell-off was ordered by CPI as numbers for the month of May came in higher than expectations. The S&P 500 finished the session in bear market territory for the first time in 2022, down 21.8% from the record highs reached in early January. So this CPI report, first one, which was September 13th, which was the last one, we already went through that situation. This one in particular was the one that actually pushed the market into a bear market. So up until that point, we weren't really sure if we were in a bear market or a bull market yet. We weren't really sure. But when this report came out on June 13th, we knew for sure that we were in a bear market at that point, because there were some technical things that you can look at on the chart that I'll show you that will give you the signal that we're actually officially in a bear market. So June 13th is when that happened. So let's go to June 13th real quick. Right. So we're gonna go back to June 13th. All right, which is right about here. Yeah, right here. All right. So June 13th is right here. Where we at? Right here. All right. So this one wasn't as dramatic as the other ones that we looked at, but it's still a pretty big drop. All right. And over the course of 2 days, you can see that was over 500 tick drop right there. You feel what I'm saying? So 500 tick drop. All right. And as far as the numbers are concerned, we want to make sure we are keeping track of that. So right now we are 20 bands, right? So 500 ticks times 500 ticks times $12.50 is 6,250. So we're just going to round it down to 6,000 and make it 26,000. So we already up 26 bands for the year, and it's only 3 days of trading. It's only 3 days. Hey, right, let's move on. You feel what I'm saying? Let's move on. All right, so the next one we're talking about is April 29th, which was a 3.6% drop in the stock market. So it was a little less than the last one. So as you can see, numbers getting smaller and smaller, right? This one was corporate earnings disappointment. So the same thing as this one up here, which was on May 18th. So May 18th, we had Target and Walmart, right? This time we had Amazon, Apple, Microsoft, and Google. All of them had bad earnings. All of them had bad earnings. And as a result, less profit for the company means as an investor, I'm a little worried about my investment. I may trim my investment, move some of that money into something else, you know what I mean? Or I may put myself in position to where I'm just sitting on the sidelines and holding cash until we figure out what's the better route to take. All right. Let me see. Yeah. Hold on one second. Let me fix something real quick, man. As you guys know, this is one of my first streams on this new platform, so I'm still working some of the kinks out, making sure we got everything right. Had to change my overlay real quick. All right, bet. So this one was another drop. So you go ahead and add another $5,000 to $6,000 on that. It ain't even no point of us, you know what I mean, taking it that far and looking at it. You know what I mean? So we're just gonna add another 5 on that. Boom. Add another 5 on that. Now we at 31, right? Now we go to May 5th. May 5th, 3.6% drop. Markets tumbled one day after Powell assured investors during a post-meeting press conference that the Fed wasn't considering interest rate hikes of greater than 50 basis points. All right. So basically, this is has to do with the Federal Reserve's interest rate hike, right? Because we know that the Federal Reserve has a mandate. All right, they have a mandate to increase interest rates to help bring inflation down. So when they increase interest rates, what that does is it makes it harder for people to borrow money. It's more expensive to borrow money, right? You know, when you borrow money, you're trying to get the best interest rate as possible. You got good credit, you want your interest rate to be relatively low. Well, sometimes your credit don't have nothing to do with the interest rate. Sometimes the Federal Reserve can dictate where the interest rates are. So during COVID, when we was in recovery mode, they dropped the interest rates all the way down to zero. So it was the cheapest amount of money that you could get access to. This is the reason why the stock market went crazy. I'm sorry. It's the reason why the stock market went crazy and the reason why the real estate market went crazy. The reason why the real estate market went crazy is because people could get mortgages for a very, very low interest rate. So they had no problem overpaying for their houses because they knew that monthly payment was going to be more manageable. So as a result, the real estate market went into a huge bullish market and hit its peak. Now, fast forward to now, the Federal Reserve sees that wasn't necessarily, or they overdid it. They wanted to help us recover and get back to normal, but they overdid it. They overdid it. So now they got to reel it back. So now they have to boost the interest rates and make them higher to keep people from spending money. And if they spend less money, hopefully it'll bring prices down, right? So what he did was he said that we may not do a 75% basis point. We may not do a 75 basis point rate hike. We may do a 50 point rate hike. What that means is when you're dealing with the interest rates, these are basis points is a point of a percentage. So when I say 50 basis points, what that means is 0.50%. All right. 75 basis points means 0.75%. So wherever the rate is at, they're going to add an additional 0.75% or 0.50%. He was just letting everybody know that we might not go that high yet, right? So as a result, when you start talking about increasing interest rates, that's not a good thing for the market. So the market ends up dropping when he starts talking like that. All right, U.S. stocks sold off more, traded higher this year, and this was earlier than the year. This was May. You feel what I'm saying? This was before we were actually declared in a bearish market at that point. We weren't for sure yet until June, but in May, you feel me, it was already selling. All right, we was already down 20%. You feel me? So with that day into consideration, you can go ahead and add another 5 bands to that. All right, and as you know that I rounded this down. So we really probably at like 38, 39, 40,000. And that's 5 days. That's 5 days, right? So why did I just break this down? I broke this down because this is going to happen again. So what we need to do is we need to put ourselves in position to get ready for these opportunities, right? So what I like to do is I like to look at the year ahead, right? We're looking at January now. What's going to happen in January? Right? January, a CPI report coming out on January 12th. CPI report coming out January 12th, right? Very, very significant because when that happens, we just saw 2 or 3 opportunities where you could have been aware of the CPI report and made $10,000 in one day, $6,000, $7,000, $8,000 in one day, depending on how aggressive you wanted to be about it. You could have made a whole lot of money in a short period of time based on that. You feel what I'm saying? So you need to be tapped in. And what we do in my group is I make sure you tapped in. I keep you in tune with the news. I make sure that you are aware of the things that are coming up so that way you don't miss it. It ain't no excuse. If you know how to maneuver in this market and you have this skill set, there ain't no excuse for you to be missing such important news releases like this. You gotta be tapped in. 5 trading days could have made you 40 bands. 40. You feel what I'm saying? You don't need to trade no more for the year. Those 5 days could have been the only days that you traded the whole year. You feel what I'm saying? So you got to make sure you tap in because this stuff is gonna keep happening. And there's other events that give you big reactions as well. But we just talk about those 5. You know what I mean? Who we got in here right now? Let's see. We got some guests. If anybody got any questions, you can go ahead and join in. If you got a question, let me know. We got the comments. Hit the comments. All right, hit the comments. You feel what I'm saying? Hit the comments. Show some love, man. Breaking down how you can get this bread. We ain't talking about no little money. This ain't no little boy money right here. This big boy money. You feel me? So we got some guests in here. Let's see. See if anybody want to join in. Leave a comment if you're ready to join in. If you want to join in on the call. All right. So that was the first thing I wanted to holler at you guys about, right? Another thing I wanted you to wanted you to tap into is this crazy stuff going on right here, right? Check this out. So we got Elon's situation, right? So everybody know, Tesla, right? Tesla is a very popular stock that people like to trade. You feel me? But the stock price dropped dramatically this week. All right, let's pull it up on the chart real quick. All right, let's put it up on. Yeah, man. So we gonna go to where Tesla's at right now. Let me look at the big time frame. Say what? Look at the big time frame real quick. Yeah, so we got Tesla over here. All right. Look at that drop from September all the way to now. So it ain't like it's new. It's been dropping. It's been dropping actually. All right, from here to here. Boom. That's a 65% drop from September to now. That's crazy. Crazy. What's even more crazy about this is the fact that there's people who know how to maneuver as a trader. They're invested. So it's only but so much they can do. You feel what I'm saying? When you are an investor, you subject to deal with this type of situation because you got to sit. You're either going to sell your equity or you're going to sit there and deal with the losses. I teach people how to trade though. So when the stock market is dropping, you don't just sit there and take the losses. You trade in the direction the stock price is going. So what this article is breaking down is short sellers. Short sellers reap $17 billion from the stock price dropping. So you got people on one side of this equation who are in panic mode because they invested in this company long term and their equity has decreased in value by 6% just a few months. So then on the other hand, You got people who are selling it, short selling it, making billions. And I, if again, we talk about this a lot, but who do you think was one of the biggest benefactors? Huge sell-off. You guessed it. You guessed it. Your boy, your boy William, your boy Willie Gates. You feel what I'm saying? He been holding a short position on Tesla for a long ass time. You feel me? This is a tweet, right? Look, this is a Bill Elon Musk. You feel what I'm saying? The boy tried to shake Elon down. He said, what he said. Let's see if I can get this joint on here. Apparently, yeah. So he asked him for some bread, and Elon was like, "Hey, do you still have a $500 million short position on Tesla?" Because he asked him for some bread. He's like, "Yo, can you donate to my cause?" You know what I mean? And he just asked him, "Yo, matter of fact, are you still betting against my company? You still shorting? You short $500 million short position, $500 million short position against my company, and you asking me for bread? How about you close out your position and take that money and invest it in your philanthropy? Why are you asking me for bread? Why are you asking me for bread? You feel what I'm saying? So he's like, I need to get some confirmation on that. Sorry to close it out, but I would like to discuss. Come on, bro. Come on, bro. Come on, bro. But my man Elon said, sorry, but I cannot take your philanthropy on climate change seriously when you have a massive short position against Tesla, the company that's doing the most to solve climate change. I'm actually decreasing the emissions being put out into the atmosphere. And what are you doing? Over here asking me for money and you betting against my company. But hey, I guess Bill knew a little bit more than what other people knew because he had that short position for a long time, and now it's finally paying off. So your boy Bill Gates just got richer. He just got a whole lot richer. All right, look at that drop right there. So you can make money as the market is declining in a major way. Like I said before, when the stock market or a stock or futures or commodity, when the price is declining, it's going to decline way faster than it is going up. It's just the way it works. Because when people start getting nervous, they start getting fearful, they get in panic mode, they move faster. When people are skeptical and they want to buy, some people get greedy and they buy immediately, but most people buy late. It is what it is. Most people buy at the top because they be late, they hesitate. When somebody tell you it's a great opportunity, you want to look into it first. Regardless of the credibility of the individual that's giving you that game, you want to look into it for you drag your feet. You drag your feet when the opportunity is right in front of you. So much to the point to where you end up missing the opportunity. But when it's a situation where it don't look good, oh man, I knew it wasn't gonna work. Let me get out immediately. You panic and get out. You. That's the reason why the stock market drops so fast when it's in a bear market. You know what I'm saying? When it's going up, it goes up slow. Over the course of months or a year, it goes up super slow compared to how fast it drops. So you're gonna make more money faster if you learn how to short. And I'm not telling you to bet against every company and bet against the stock market or bet against the country. I'm saying trade in the direction that the price is going. If the price is going down, you need to short. With the understanding that if you're correct about the direction that you think the prices is going, you're going to end up making more money faster if you short. It is what it is. 17 billion. $17 billion, yo. So these people was betting against Elon the whole time, and it finally paid off. $17 billion made by shorting Tesla stock. All right, you. Touch on, but before I get into this, any chat about, I got some people in here who are part of my trading club. You know what I mean? If you want to join in, man, let me know. I can add you to the call, or I can add you to the live stream. Let me know. All right, I'm new to this too, so ready to jump in, but I'm not responding or whatever the case may be. You could leave a comment. All right, you want to be a part of it. I thought that was very significant. All right, let's look at this. This is a big issue right here. So for those of you guys who are active traders, all right, for those of you guys who are active traders, you know that yesterday the prices of the stocks on the stock market was actually it was a good day. It was a green day. All right, most of today was red until the end. All right, until the end. You feel what I'm saying? Then at the end of the day, the prices started to go up a little bit. So it closed out pretty strong bullish, but for the most part, it was a red day. Yesterday, right? So yesterday, Thursday, we went from this low down here all the way up to this high right here. All right, so the market almost went up 2% in one day. That's the S&P right there. Let me turn this on real quick. All right. That's the S&P. Let me add this so you guys know what we're looking at. All right. Yeah. Appreciate y'all for joining too, man. I just like to share this information because you know, it's valuable. You feel what I'm saying? It's valuable. You can use it. All right. Got up for 2023, man. It's gonna be a lot more opportunities like this in the future. So don't miss out on it. All right. So peep game. So yesterday the market went up almost 2%. What happened? What's the significance of yesterday? Very important for you to understand this dynamic. All right. What we dealing with, excuse me. What we dealing with is a real weird situation. The reason why this is so weird is because we had a report that comes out talking about job claims, right? Jobless claims. So check out the actual title, right? The title of this article says the Dow gains nearly 350 points as jobless claims data eases rate worries. Now, if you, to the untrained eye, you know what I'm saying, to the person who's not necessarily privy to this information, this is like another language. You feel what I'm saying? You're talking about speaking a whole nother language. Because this don't make sense to people who, they don't teach us this stuff in school. So I'm gonna break it down. Okay, the Dow is just, you know, it's an index stock market, all right? So that it gained 350 points. This is a good day. As jobless claims data eases rate worries. So jobless data, all right? So we have an economic news report that comes out to let us know what the job market is looking like, right? So the job market is going to let us know if people are getting more jobs, if they're getting less jobs, if people are being laid off, if people are unemployed, what's the unemployment rate, what's this rate, what's that rate, right? So the unemployment rate comes out, and the unemployment rate comes out, and it's more unemployed people than it was before. It's more unemployed people than it was before. So that means that people are losing their jobs. That's what this means. Let me reiterate this. Dow gains 350 points as Johnson eases rate worries. That means that people are losing their jobs. And they're losing their jobs, and it's a good thing for the stock market. Why is it a good thing for the stock market? The reason why it's a good thing is because it eases rate worries. What is a rate worry? Why are we worried about rates? The reason why we're concerned about rates is because the Federal Reserve interest rates have a big um, have a big impact on the actual stock market, right? So the Federal Reserve said that in order for inflation to get under control, they're going to need people to lose their jobs. If people start to lose their jobs, then they may stop increasing the rates to borrow money. If they stop increasing the rates to borrow money, then that's a good signal for investors to start investing in. I know it sounds crazy, but that's where we at right now. It is what it is. So they're actually banking on people losing their jobs right now. I want y'all to understand that. That's important. It's important for you to understand that there's people out there betting against you. And it's not because they don't care about you. It's because they need to get inflation in order. And they know that if you're making less money, then you're going to spend less money. And if you spend less money, then that means that the prices of goods and services are going to have less demand. And if there's less demand, then it will bring prices down. And if the prices come down, then inflation will come down. And if inflation comes down, now we're back to where we need to be. So it's going to have to be same in order for it to get to where they want it to be. And the pain that we're talking about is people losing their jobs. Look at the fine print. A strong labor market, right? Let me blow this up. A strong labor market and resilient have worries that interest rates could stay higher for longer, even though pressures keep alive hopes of smaller increases. So a strong labor market and resilient American economy have fueled worries. Why would you be worried if the labor market is strong and Americans are resilient? That's something to be worried about? Yeah, it is something to be worried about if you care about interest rates. Got to understand how this stuff works, man. You feel what I'm saying? So on a day like this, where we get unemployment that's higher than it was before, the stock market goes up. How much money can you make on that? The reason why I'm breaking this dynamic down is because you got to understand. If you're at a situation where you have a job and your job is in jeopardy, not because you're not doing your job well, but because there's powers that be that are banking on you losing your job for the sake of the country, for the sake of the interest rates. So you need to have something in place to where you could balance the situation, hedge against what you might lose in case you end up losing the job. On days like this, the stock market goes up 300 points. The S&P 500 futures goes up 300 points. 300 times 12.5. All right, that's $3,750 profit right there. So you can make $3,750 profit off of the news that comes out saying that people lost their jobs. You can benefit off of people losing their jobs. I just broke down how the powers that be are working against you. And there's people out here who are profiting off of your downfall. I'm showing you how you can profit off of your downfall as a hedge against what you might lose. Because it is an actual thing that could happen. This is what they're trying to do. This is part of their mandate. They need people to lose their jobs. Understand, they need people to lose their jobs. That's their plan to get inflation under control. So I just gave you a play. The unemployment report came out on Thursday. That same day, people understood that the unemployment rate went up. People are losing their jobs as they are supposed to according to their mandate. While they're losing their jobs, the market goes up. So the S&P 500 futures went up 2% on Thursday on bad job data. We make over $3,000 on Thursday in profit based on negative news. So I just showed you how you can make money off of the good news and the bad news, regardless of the direction of the stock market, regardless of the direction that the prices is going. You got to figure out a way to get ahead of it and protect yourself because they not they actually need you to, you know what I mean? They need you to be hurt a little bit. It's just part of their process of getting us back to where they need to be. Where we were. Check that out. Notes report. The Fed's plan to bring down inflation by creating job losses is working. He's smirking. He's he's smirking, yo. He got a smirk on his face. He got a smirk on his face. My man got a smirk on his face, bro. My plan is working. It's not funny, but you gotta understand how to play both sides, man. Is what I'm saying. Don't be a victim because you don't have to be a victim. I'm showing you how you can benefit off of the situation. People who are in my trading club that quit their job, they're not even involved in this whole situation right here on the negative side. They on the other side making money off of this. The Fed's plan to bring down inflation by creating job losses is working. I'm smirking. That's their plan. Their plan is to bring down inflation by creating job losses. All right. Just so you know, the number of available positions in the U.S. fell 10.3 million from 10.7 million in September. The quits rate dropped to the lowest level in 7 months as fewer Americans voluntarily left their jobs. All right. Less people are leaving their jobs according to the September. Okay. Ordinarily, job losses and slower growth are a bad thing. In the current economic climate, Jerome Powell, Federal Reserve Chairman of the Federal Reserve Bank, announced his plans to raise interest rates and use other tools at his disposal to contract the economy in an effort to beat down inflation from a high. Therefore, job losses are a positive indicator in the war against runaway inflation. Job losses are a positive indicator in the war against runaway inflation. How are people losing their jobs a positive indicator? Because that's the method that they're going to use to bring inflation down. Jobs need to be lost to tame inflation. This is not something that I'm speculating. This is not a conspiracy. This is Forbes.com. I'm not a conspiracy theorist. This is truth. This is what he said. This is what their mandate is. This is happening. It's not hearsay. So people try to debate about whether we're going into a real estate market or whether we're in a recession or not. That's up for debate. This is not up for debate. This is actually happening on purpose. On purpose. Why? Because businesses are going to be spending less. All right, they're going to be spending less because they don't have as much employees on the books to pay. All right, that's one of the reasons why. And also, we're going to bring demand down. So if people don't have as much money to spend, then there's lower demand for products, which means that we're going to have to bring some of these prices down. Because why would I be charging high prices for stuff that people ain't buying? If I need you to buy it, I'm going to bring the price down so you can get it. All right, trickle down effect to all these other big companies, and now we get to the point to where prices of goods and services are a little bit less than what they are right now. They needed to get down to 2% or lower. All right, right now we ain't there. All right, right now everybody understand this, man? Look at this. Tech layoffs take center stage. All right. The high-flying tech sector downsized more than 140,000 workers this year. 140,000 people lost their jobs in the tech space. Everybody want to be in the tech world, but they don't know that you could fall victim to a situation like this based on stuff that you ain't got no control over. 140,000 people in one industry. That's crazy. That's crazy. Elon Musk bought Twitter and cut 50% of their staff immediately. People forget about it. They don't think about this stuff. Lyft cut 13% of its workforce, about 500 people. Open Door cut 550 jobs. All right, Salesforce, DoorDash, Cisco, Carvana, Roku, Coinbase, HP, all of these companies are downsizing. All tech companies. All right, Facebook, Meta, 11,000 people are losing that work for Meta. It's not a game, man. So what are you going to do to protect yourself? Because it ain't no guarantee that this wave is not going to hit the industry that you in. So how are you gonna counteract this? I would advise for you to learn a skill that will allow you to make as much money as you make at your job, sitting here pushing these buttons and trading with us. You feel what I'm saying? I would at least try. That's me. You know what I mean? That's me. All right. Let's check this out. So while this information most people are not privy to, I just broke it down, and there's people what that article actually meant until I broke it down. So if you're feeling like that, imagine what the general public is feeling like by not even knowing that that article was even released in the first place. They don't even know that there's a wave coming. They have no idea that there's an actual mandate for you to purposely to get people to lose their jobs. They have no idea. They're completely you know how I know that? Because of this. Holiday related debt soars 20% to an 8-year high of 1549. So it says the average person that's spending money during the holidays spent around $1,549. They're saying this is uh this is a very high amount compared to normal. You know what I'm saying? So this is about a third of consumers are assuming debt to pay for their holiday expenses. We just got done with the holidays, guys. And this is what people are doing. Simultaneously, hundreds of thousands of people are losing their jobs and they don't even understand why. It got nothing to do with how efficient you are at your job. It's due to the Fed's mandate. Like, and you are out here spending money on holiday gifts. 90% of the stuff that you buy, you don't even need. It's not a necessity. It's tradition. You spending off a tradition. It's not a logical thing to do in a time like this. 24% spike in debt, in average debt, compared to last year. The highest spike in debt level in the 8 years that the online lender has been tracking the data. So since they've been tracking this data, 8 years since 2015, this is the highest that it's been. Meanwhile, we got people over here trying to figure out if we're really going into a recession or not. You see how crazy of a time we're in right now? You got people trying to figure out if we are in a real estate bubble or not. You got people who are trying to figure out if we're going into a recession or not. But how do people actually respond? They respond by spending more money. It makes no sense. It makes no sense. You have the Federal Reserve telling you very, very clearly that their mandate is to make people lose their jobs in order to bring inflation down. And people spend more money as a result. Makes no sense. Don't be in that category. Put money in your pocket. Don't take money out. All right. Rest in peace, Nipsey Hussle. All money in, no money out. Especially in a time like this, you need to be developing a skill set that will allow you to keep money coming in, not preparing for holidays to buy stuff that you don't need. During a time like this, your whole sector that you work in could take a huge hit when it comes to employment. Look at what just happened in the tech sector. It's not over with. It's not over with. Why is it not over? I'll show you why. I'm going to show you why it's not over. The consumer price index lets you know it's over. The consumer price index. This is the consumer price index. It down to like 10 years. Let's go to 2008 before the recession. All right, boom. 2008 crash, drop. It dropped a little bit, then it kept going. Right? Look here. This is COVID right here. This gray line. This is COVID right here. You got a drop on CPI. All the prices went down because of supply and demand. Right? So when you have a recession or you have COVID or you have a crash, people don't want to buy anything. They get worried. They get scared. They don't want to buy nothing. They hold their money. They hold their money. So because they holding their money, the prices go down. And when the prices go down, at the same time, whatever the crisis is comes to an end, people rush back out there and start buying stuff up again, push the prices back up. So look at how this incline is diagonal. Look at what happened after COVID. It's not as diagonal as this. It goes damn near straight up. Right? So let's bring it down to area, right? So boom, we got the recovery from COVID and then a shoot to the upside. All right, we can look at where we at currently and you can see that it looks like it's leveling off a little bit. So it's not like we so far away from the finish line of getting this thing to turn to the downside. It doesn't look like it's rising as dramatically as it was back here. So that is a good sign. But this is the reason why they're taking drastic measures, because they're like, well, we need this to happen faster. This ain't happening fast enough. We need people to lose their jobs. That'll do it. That'll do it. If they ain't got no money to spend, then of course it's going to drop faster. We need more people to get fired. That's what they're trying to do. So if you're trying to figure out when this is going to be over with, keep your eyes on the CPI. Once this number starts to level off and go down, then you know that we are getting back to where we want to be as an economy. All right. Gotta be tapped in, man. Gotta be tapped. So we're gonna jump on here again on we're gonna jump on here again in all right, Sunday I'm going to break down some information in my outlook on 2023 and what I believe you guys should be getting yourselves up for and getting prepared for, because you know it's not a game, man. It's things aren't looking that great, and even though it might feel like it's not that bad, the fact of the matter is there's things out there that's working against you. All right, specifically the Federal Reserve situation, as far as them and their mandate to try to get us back to a level number with inflation. The things that they're going to have to do in order to get us there is not going to be something that is going to be comfortable for the average person. And this is talk. It ain't got nothing to do with the level of pay that you make either. Anything from low level jobs to high level jobs, they're all at stake right now. So don't get too comfortable. All right, not just to be feeling comfortable like everything is cool, because it ain't. It ain't. But what can you do, right? We know that if their mandate is working and people are actually losing their jobs, and we can track this by looking at the unemployment report, the JOLTS job report, the ADP report, we understand that when those results come out, if we see a negative number, then it's probably going to have a positive impact on the stock market. Thursday was a prime example. So what we do as traders, professional traders, we take previous price information and historical data to plan what may happen in the future. Then we make our educated guesses and bets on the fluctuation of price, whether we think it's going up or down, based on that previous price history. So if I have previous price history from just yesterday, 24 hours ago, telling me what the potential reaction is going to be if the unemployment rates continue to go up, then I know how I'm supposed to play the market. That don't necessarily have to, you don't necessarily have to be someone who trades every single day. You could have a situation where you plan for things like this. You take advantage of things like this. Put your money and your risk into things like this. And then when they play out the way you think they're going to play out, maybe that's the only opportunity that you actually need. And nobody say you got to trade every single day. Ain't nobody say you got to trade every single month. You might make one trade the whole year. Depending on how much risk you put in and how big the move is, that might be all you need. That might be all you need. All right. Some people been betting against Tesla the whole year. It finally paid off in December. Bill Gates was holding a $500 million short position in Tesla stock the whole year. Finally, starting in September, it started to dramatically drop. And now he's in position to cash out. He had to wait the whole year to make this happen. In the middle of all that, since he had $500 million tied up, he hit Elon up direct to see if he could get an advance on what he was going to potentially profit off of shorting his company. Hey, bro, can you cut a check to my charity organization? Because I thought that Tesla was going to drop earlier than this, and I was going to already have some bread to put towards it because I was shorting your company. But since your company holding up a little stronger than I was expecting, can you cut a check for me? Elon's like, man, get the fuck out of here, bro. All right, that's a bet. Fast forward 2-3 months later, $17 billion profit for short sellers against Tesla. Crazy, crazy. Yeah, man. So I got people in here about to start adding y'all in. We got Sir Hots in here. We got Mona in here. We got Phil in here. Which one of y'all want to join in on the live stream? Which one of y'all? Seeing Sir Hots got his camera on. I'm about to add you, bro. Don't get scared now.
Hey, don't get scared now. Nah, I wanna go. I wanna go. I wanna go.
What's good? What's
Another
going
day,
on?
man.
Yeah, man. You got something you want to holler at me about?
Man, I really want to talk about what was about the algorithm, man. About how can we put it on how many commodities we can put it on.
Okay. All right. So what he talking about is we do we do algorithmic trading in my group, right? So we do algorithmic trading. What that basically means is you got to have a system and a strategy to trade with. I don't advise anybody to come to the market and just blindly buy and sell anything. You need to have a strategy that works. This is complicated. If it was easy, everybody would be doing it. All right. So we know that it's some work that goes into this, right? So what we do is we put systems and strategies together and we test them to see if they actually work and they're profitable. If we get the numbers that we want or we desire with that particular strategy, then we plug it into an algorithm and allow for the system to trade for us automatically to take the human error out of the equation. Because as humans, we make mistakes, we get emotional, we think we see things that aren't there, whatever the case may be, and then we make decisions that go outside of the actual system that works, maybe not on purpose. It's just part of human psychology. So in order to get rid of all that, we go algorithmic and we trade algorithms. So what he's asking is how many algorithms, what assets can the algorithm be applied to? Truth of the matter is, it can be applied to any asset, but the best results that you're gonna get are with Nasdaq, with the S&P, all right, and with the Dow. I would stay on the indices. All right, that's not to say that you can't trade oil or gold. All right, but the results as far as the profitability, drawdown, you know what I mean, your potential max loss, your potential profit. I would say that the best results are with the indices and the Nasdaq in particular, right? So you could apply the algorithm to the Nasdaq and probably get the best results based on the 4 years that we back tested it.
All right, thank you,
All right,
man. That's all I wanted to know. I just wanted to make sure. Thanks, appreciate that.
all right, no problem, no problem. Um, let's see, who else want to join in? Mona, we got Mona here, we got Phil here. Either one of y'all want to jump in? Question, anything you want to discuss? Let me know. If not, we could wrap it up. You know what I mean? I appreciate y'all for joining. All right, this will be the first of many streams on here, and we will be getting more and more in depth into these different opportunities and these different plays that are coming up for the new year, man. 2023, we want to make sure we take advantage of every opportunity available without being greedy. Be smart. All right, we're gonna be smart, but we're not about to sit on the sidelines and let these opportunities pass us by just because we are, not prepared. Ain't no such thing. We're gonna be prepared, 100%. It's just gonna come down to whether we want to execute or not. You feel what I'm saying? Appreciate y'all. I'm about to turn my old school back on, and I'm about to enjoy my weekend. All right, hope y'all enjoy y'all weekend, man. Do some studying. All right, use those resources that we talked about. Market Watch, CNBC, Yahoo Finance. You know what I mean? Look at the right type of news. Don't just be looking at the negative stuff, the crime and all that. You want to be aware, but you don't want to consume yourself with negative energy that's not going to help you get no bread. It's a time right now that we're going into where a lot of things could be on the decline. Real estate, stock market is already there. We just talked about the job market. It ain't looking too good. All right. But you can still have an amazing 2023 if you prepare yourself properly. Tap into a skill set that's going to allow you to get this bread. All right. Make sure you follow me on Instagram. Click the link in my bio on Instagram and join in on our Elite Trader program. Join our Discord. All right. And tap in with us. We get to this bag. We get to this money every single day. All right. Appreciate y'all. Peace.